Charles Goodhart. He is a professor at the London School of Economics. Thank you very much indeed for coming in to talk to us. Let's begin with QE and this 75 billion figure. With events moving quite quickly, is that enough?
Who knows? One doesn't have a very good idea of how effective QE is going to be. I think I'm rather with the Chamber of Commerce. I think that QE will have less effect this time than it did last time. Official interest rates are a lot lower, and there is already a lot of liquidity in the financial markets, and the financial markets are less dislocated than they were there. The real problem is not the level of official interest rates, but it's the difficulties that the banks have in getting funding and the spreads that the banks charge.
So commercial interest rates that are actually going to the businesses that would like.
And commercial interest rates are disconnected from official interest rates, and QE is a way of trying to put more downwards pressure on longer-term official rates. It's not going to have that much effect on the rates that matter to the private sector, the terms and conditions on which they can borrow. So in some ways, QE is actually aimed at the wrong target.
Well, there have been some more creative ideas floating around to try to address the concerns that you're talking about there. George Osborne was talking, for example, about lending more directly and putting more pressure on banks to lend directly, or the idea even of a public bank that would lend to small, medium-sized businesses. What do you think of those ideas?
Well, you can't set up a bank at all quickly. And there are always problems with the public bank. Nobody quite knows in a public bank what it is they're supposed to do. And the track records of public banks have not been good. I think there is a very strong case for trying to provide some additional assistance to small and medium enterprises. But it's got to be through some kind of incentive on the banks, both to originate and to make lending to SMEs easier and more easily affordable. And there's also a good case for trying to do something to ease the condition of first-time house buyers who still have got to face a very large down payment, which most of them simply can't afford.
Is there scope then here in this very difficult time to be a little bit bolder, to be a bit more creative and not just use the traditional QE but come up with other schemes, such as some of the ones that you've announced or suggested, and even more that to see if the central bank has got some more tools in its toolbox, if you like?
Well, it's not the central bank, because the governor has made it fairly clear that he thinks that direct assistance of one kind or another to the private sector is not the role of the central bank, but should be primarily undertaken by the Treasury. And George Osborne has suggested that the Treasury will be looking at various ways of credit expansion, credit ease, CE, and we're all looking forward with great interest to see what they actually come up with in November. And I think you're right, more innovative ways of trying to provide monetary facilitation for greater expansion of credit is necessary now. And as Adam Posen himself has suggested, he himself indicated that there are various additional measures that may well be necessary if QE fails to have that much effect.
Now, of course, when we have these high unemployment figures, as we've seen today, it does put a lot of political pressure on George Osborne, the government, to do something to try and alleviate it. The obvious something, this has already been called for by the Shadow Chancellor, is to ease off the austerity measures. What do you think of that as a policy?
Well, I would try and put the emphasis much more on credit ease and on QE. And the governments everywhere around the world have got themselves into a position of really very high deficits and debts, greater than really are easily sustainable. And I think in the long run it is desirable to try and get the fiscal position of this country, as indeed of most other countries, back under much greater control.
The difficulty, of course, though, is trying to get this fiscal position under control, and there's austerity measures in place, but without pushing the economy, be it here or elsewhere, back into a recession.
Yes, the great problem is that what the hope was, that what was going to happen, was that we would be expanding our net trade, that exports would be growing. But the problems in Europe and the US have been worsening so much that the net trade is not likely to be as buoyant and to lift us off our difficulties as we would have hoped. And that's one of the reasons why more has to be done. But certainly at this stage, I would have the more being done much more on the monetary side.
Charles, if we look at what's happening in Europe, we see once again today we've got a grand proposal, a roadmap, a 5-point plan, but very short on those cold hard facts, that detail of how this is actually going to come about.
I think that that's true, and the difficulty is that ultimately there are different views about the long-run development of the euro. There are some who want to see it a much more federal system with much more centralized fiscal policy and some greater centralization of politics as well. And there are others who wish that it should remain purely a currency union, but in that case, without a centralized fiscal position, there's probably a need for the eurozone to become much smaller.
I was going to ask you about that. I mean, if you look at, there was a letter in the FT today actually calling for this greater fiscal union.
I was one of the signatories.
Indeed. When you said, what you're calling for is for them, is really for a greater fiscal union. Can it exist? Can the eurozone exist if that doesn't happen?
It could, but it would probably have to be much smaller. It would have to be a different eurozone. And getting from here to there would be very problematical. And of course, reducing the eurozone from the present size to a much smaller size would be politically extremely disturbing and would cause great dislocation. On the other hand, many in the eurozone are not prepared for and not willing to accept greater centralization.
The concerns that we're facing right now, not the kind of the longer term theories, but actually what's worrying you about what's happening today and tomorrow and next week, is it the credit risk premiums which seem to be rising rather rapidly?
Well, they're a symptom of the intertwined problem between the weakness of the sovereigns and the weakness of the banks and the weakness of the economy, all of which sort of work in a horrible sort of interaction, driving each other down. And that's got to be solved initially, because otherwise we run a danger of a disorderly default resulting in contagion, and that has got to be prevented. But once one's actually prevented that, and that is the first stage, and an essential first stage, then we actually have got to sort out once and for all where the euro is going to go, the medium and longer term direction of the euro. And one of the real problems in all of this is that there have been different views about what the end game ought to be.
And if the end game is that everybody stays in the euro, then how do you get from here to there, where you've got these deeply indebted countries able to clamber their way back out of recession, able to cut back on austerity measures? Where does that process begin?
Well, it can be done, and it has been done in some countries. Ireland, for example, is working its way out of these difficulties.
Do you think Ireland will be the first to be able to say goodbye to the IMF? Well,
the Baltics and Latvia almost already have. But the process of trying to get what is known as an internal devaluation, which is a coordinated reduction in wages and prices, so that these countries can restore their competitiveness, is really very difficult and politically very hard. And the Mediterranean countries have not really been able to move very far down that road, but Ireland has.
Are you looking to Cannes as the date when we're actually going to find out much more detail? Because that has been what's been short on the ground up to now.
Well, Cannes, I think, will only be the first stage. Cannes will be the stage at which the European countries may make agreements among themselves that will be sufficient to reduce, hopefully to eliminate, the likelihood of the tail risk of a disorderly default and contagion. But I very, very much doubt whether Cannes will resolve the question of the end game or the point that you were raising about how do we get growth and competitiveness back in the periphery, particularly the Mediterranean periphery of the eurozone.
Lots of very big questions. Charles Goodhart from the London School of Economics, thank you very much indeed for taking the time to see us today.